Alright, so two parts to this video, and they're going to be in two separate videos. This first video is going to be just today's price action along with yesterday's and an overview, and it'll cover always in and just kind of the key points. Second video is really my opinion on how to study Al Brooks, which I'll explain in the very next video uploaded after this. So stay tuned for that. Alright, so coming into today, here's a 60-minute chart, and this is all the spider, but that's what I trade, and we can look at the Emini. You can't tell the difference. So I'll flip back and forth with the Emini, but in general, I'm going to talk in terms of the spider. With the Emini, we made a new all-time high, but we failed to... Is that right? Huh. Failed to close at a new all-time high, but we did get a new all-time high. Dow Jones, it's came within... Look at a 5-minute chart. Dow Jones came within, like 37 cents of 20,000. So we'll probably still get there. Alright, so let's look here. Monthly chart channel, bears want a parabolic buy climax, but what's most likely? Test down and reversal back up. Good parabolic buy climaxes, they really happen. They need to look like this, and I basically call this a parabolic buy climax just because of the term. Strong push up, second leg up, and then a sharp sell off. It's parabolic in nature. It's unsustainable. That's why it collapses. So, if we just look back, here's basically another one. A spike up, followed by a second push, and then just a sharp reversal. This is the parabolic sell climax. Sell climax, another one, another one, another one. And then we got a sharp reversal. Parabolic moves, when they reverse, need to look like this. Alright, so, weekly chart, closed above last week's high. It's basically a high one buy, but still, this is the spider, and we have not closed a new all-time high. Here, we closed at a new high on the weekly chart. Monthly chart, still strong. Alright, now I'm going to just look at the spider. 60-minute chart, buy climax, another buy climax, another buy climax. Broke above the ties of this trading range. So probably second leg up. We'll probably get up to the all-time high. I think we will. This channel is still pretty tight, and so the big question is, will the bears make money that sold here? And I think they will. But you may get a small second leg up and a test down. This is also, it's kind of a nested top. First push, second push, so arguably a double top, 2 legs up, 1 pullback, 2, full breakout, and we may get a third push up to a low 4. But the problem with that is, this is something I'll discuss in my next video about really understanding Al's terminology, is this is a bear trend, spike, channel, 2 legs down, but when you look at it, possible final flag, sell off. When you get a reversal that looks like this, that's strong, you have to ask yourself, are we still in a bear trend or, a trading range? So at this point, when you get the strong breakout, this is a major reversal, minor reversal, minor reversal, major reversal. If you're looking at, if you have Al's new video course, I'm referencing his terminology video. It's video 1, it's halfway through in. He talks about minor and major reversals. So this is major, which will mean a second leg up. These are minor reversals. Minor reversal, minor reversal, minor reversal. So go to video 1 in Al's course, in his new course, and you'll find what I'm talking about. Anyways, when you get this strong reversal up, it's probably no longer a bear trend and more likely a trading range or bull trend. Therefore, traders are selling above bars and scalping, selling above bars and scalping, selling, scalping. So to simply sell and hold and sell higher isn't really the best strategy. It's kind of sorry about that. It's sort of similar to yesterday. And I'll go ahead and talk about yesterday first before today. So here, this is basically a parabolic sell climax. Spike. So 1, 2, 3, wedge bottom. That doesn't really matter. It's, when you look at it, tight trading range, strong bear breakout, trading range, another bear breakout. It's parabolic, and when you're in a strong trend, as soon as bulls begin to make money, it damages the bear case. So bulls made money, bulls bought, bulls clearly made money. At this point, we're either in a bull trend or a trading range. So the best the bears are likely to get is a trading range. So think about that. I get it, 40% chance. I know what you're thinking, 40, this is a double top. Here, 2 legs up, low 1 short, then 2 legs up. So in essence, it's a nested double top on a higher time frame. So you're thinking, gee, what if we get a bear breakout, measurement down? Well, and that's possible, but it's not likely. And then as you can see over here, bull breakout, bears made money selling above bars, but they cannot make money on a scalp. This pullback is about 30 cents, which is around 3 points from high to low in the E-mini, if you want to follow along in the E-mini. Again, 30 cents. Again, here's a minor reversal, but bears made money. Therefore, traders will begin to sell more aggressively, trying to get a bear breakout. That's why it's not as effective. You're better off when you're looking to sell on a short for a swing. You're better off waiting for a credible stop entry or a bear breakout such as this. Now, with that said, just because you get a good stop entry here, get a good stop entry here, the stop entry looks good, and it's better if a trader can sell more higher and have the ability to scalp out. You can see that's what traders did on this bar. So again, you're better off waiting for the bears to actually make money. And then here, the bears had a chance at a strong bear breakout, but they really needed to follow through. And with that close above its midpoint, and I'll finish this and then I'll kind of back up. I'm sorry, I have a lot of things to say, and it's easy for me to just get off track, and I know that's a habit and I want to work on that. But strong bear breakout, bad follow through, close to the 60-minute moving average, so probably more of a trading range, and 50% of the time you get an opening reversal, so you have to be thinking about the possibility of a pain trade and a bull breakout and something like that. So real quick, let's look at yesterday. Or actually, talk over here. Buy climax, so parabolic in nature. The bears tried to get a parabolic sell-off, but they tried here, and then we got a micro channel up. And at that point, we're either probably in a bull trend or a trading range. So the best the bears can hope is a trading range. We're low in the range, better to buy. And you can see the rally wasn't that strong, so the bears, the bulls tried to, we pulled back to the moving average. And, really very tight channel up, but then we went sideways for about 20 bars. probability around then is around 50-50, so you're really better off, this range is too small to really trade. You're better off waiting for the breakout and follow through. But even here, it's not that strong. It's 3 pushes up, and it's just a problem. It's not an obvious breakout yet. The bulls probably needed one more bar, and you can see the bears immediately sold it. Bulls bought more lower, got out break even, and more trading range. On this day, I'll put the session breaks on. Good bar 1, but bad follow through, 2 legs up. This looks like a trading range, and you have a second entry short, so it's okay to get out of shorts and even sell on betting on lower high major trend reversal, but probably stop up here. I wouldn't put a stop up here, and but not great forcing you to sell low. It's really a trading range open. Better to wait for the bear breakout, something like that, or even better this. And here higher probability short, but hard to hold. And then we get the bear breakout. Probably going to get a new low on the day. 50-50 chance to get an opening reversal. We traded up. We may trade down. We'll probably trade below that low. We may test the 60-minute moving average. We didn't touch it all day yesterday. Strong bear breakout, but no follow through. So when you look at this, you got to ask yourself, erase this bar, and you have a trading range and another trading range, and then another breakout. So trading range, breakout, trading range, breakout. Unless we break strongly below this moving average, 60-minute moving average, we're probably in a trading range. And this is probably a trending trading range day. So bulls will probably make money buying this low. So, what do? Certainly you get out of shorts, always in. I think it's, better to sell. Maybe bulls buy, but bulls have to get out. Maybe bears sell. Probably always in short on this bar, but really the bears need more. And this was a good short. It's the second entry short, double top, closing on its low. Here's where it clearly became always in short, probably a second leg down likely. So here, I think we're forming a trading range bottom. So I'd be more interested in buying than selling. So I think always in bears get out, and that we're probably going to rally, probably going to test up, probably going to close this gap. So how do you manage this trade? Well, if you buy above, I wouldn't put your stop down here. I'd put a stop, way down here, so that just in case we get a second leg down and turn up. At this point, I think we're close to the bottom, but we may not quite be at the bottom. So, and you're at obvious support, 6-minute moving average. So, okay to buy. 4 bars up, low 1 short. So, probably buyers below. Strong bull breakout. The bears want 2 legs up, but at this point, it looks like we're more in a trading range. So, bulls will buy pullbacks, and they'll even buy a new low. So, you got to ask yourself, do you really want to be selling when we may close this gap? And we're probably at this point always in long. Now, it'd have been better if the bulls could have gotten follow through. Pull back again, and I know I already discussed this earlier. Small pullback bull trend, better to wait for a strong bear, something like this. But again, it wasn't strong. I certainly wouldn't sell it. If anything, I'd buy, and we ended the day. Today, strong bear breakout down, but we're at the moving average, very close to it, 60-minute. Bears really need one more strong bar to make it clearly always in short, where we'll probably get a measured move down. They failed, so you have to be thinking about a possible opening reversal. It happens almost every other day, about 50% of the time. So low 1 short, I think we're in a trading range, so I'd rather scalp. I think bulls get out above. They certainly get on this close or this close. Probably at least second leg up, so buy for any reason, but you're high in the range. We haven't clearly broken above it, and I think the bears will make money selling this high. And they did. And this is very similar to over here. Bear breakout, bad follow through. It's similar to bar 1 and bar 2. If the bears could have gotten this to close on its low, we probably would have gone lower and, maybe gotten the bear breakout, but they didn't. And bulls giving up. Bears giving up. More bears giving up. More bears giving up. So, surprise breakout. I thought that when we got this and we got this deep sell-off, I thought this was disappointing enough that traders would buy back, sell out of longs at the close or somewhere up here. And I wasn't expecting this. And when we saw this, probably at least second leg up, so probably at least a little higher, but then bad follow through. But look what happened. These pullbacks are becoming very, very small. And if I look at it, I think this was 73. This is about 20 cents, so around 2 points in the E-mini. Another bear breakout, another bull breakout, bad follow through, tight channel, stop down here, more up, probably move your stop down here, but very tight. I would not sell for any reason. Tight bull channel, the only thing to do is buy. It's too early to sell. Another buy climax, okay to take profits. This is getting very parabolic. 1, 2, 3, spike. So first push, second push, third push. It's really not obvious, First push, second push, third. First push, second push, third. Bull trends are always forming wedge tops. Bull breakout follow through, obvious targets above. Up here, we've got more, up here. So there are targets above. We probably will not get this. Probably will not get a measure move of that. I think reasonable we'll get that, but you got to be aware the Dow Jones might be testing the 2000 area, and it's a bull trend, so better to be long than short, and any reversal down is probably minor. Okay to get out, but if you do, you got to get long again, or buy the third close. Another buy climax, okay to take profits, definitely. I'd get out of shorts below here, and what do? Well, high 1 buy, I wouldn't buy it. Too many buy climaxes. Here we have a high 2. It's okay to buy, but again, we're probably going to touch the moving average. Bears are probably going to make money selling this high, so I would rather buy at the moving average, and that's exactly what traders did here. So at this point, you think, oh my gosh, huge bear breakout. The bulls are giving up. It's going to go lower. Well, it very well could just be a sell vacuum of the moving average and support, and the bears really need one more bar, and they need the bar to look like this. So 2 bars in a row looking like that, then we'll go lower, or something like this. Didn't get it. Now it's 20 gap bar buys, so probably in the early stages of forming a trading range, probably the final flag up. 3 bars up, good, but again, bad follow through. It's a small double top, a lower high major trend reversal, and more often than not, well, I don't want to say that, but it happens enough times where you get the double top bear breakout and measure move down. But after 3 bars up, I certainly would not. I wouldn't take the short, and I think Al said the same thing in his trading room. It's just the odds are you're going to get a second leg up, and that's why Al said he wouldn't sell it either. So, again, probably second leg up, and this is disappointing, so this will cause more bulls to scalp. Got our second leg up. The bulls really need to get the breakout, and again, here, double top, you can call it a higher high major trend reversal, doesn't matter. I think bulls get out. Aggressive bears sell, betting on a measure move down to this target. We're getting close to 20 bars sideways, and another thing about this was a 10 bar pretty tight trading range, so this bear breakout, when this reversed, it lessened the probability that we'd get far away from it. So getting close to 20 bars, probably, the longer we go sideways, the more it's a trading range and less of pullback, and it decreases the probability. And the bears keep trying to break out, can't get it. Theoretical stop below here, maybe 50-50 chance we break below and turn up, 50-50 chance we get the successful breakout. And the bulls really just aren't doing enough. And I think Here, well, I'll go to here. Here was a credible stop entry, but the issue is stop entries, even when they're low in the trading range, they're never quite, it's really hard to get high probability in the trading range. And the reason why is you really don't get high probability when the range is, 44 points, 40 cents in the spider. You really don't get high probability until you get the actual breakout. So, yes, failed bear breakout, wedge, 1, 2, 3, but until the bulls get consecutive bars and a strong breakout and follow through, it's really not anything different. And that's what happened at the end of the day. So always in, bear sell, but really ugly in here. I think I'd get out below this bar. I'd rather be scalping. I'd rather, sell above this high, but, maybe buy below this low. But, if you didn't get out in here, you get out on this close or this close above this bar. Anywhere in here, I think we're always in long, but stop down here. Probably will get a pullback, so if you're buying, better to buy lower. And, it's still buying pretty high in the range. You can see that's what happened here. Look right here. So let's say bulls buy the close, 26.58. And maybe they buy 1 point lower at 26.48. Whoops, I messed that up. So 26.58 plus 26.48 divided by 2, 53. So, look right here. That's no coincidence. So what I just did is, okay, let's say you buy this close. You buy your close, scalp out. Buy the close, scalp out. You buy this close. And you're at the top of the trading range. So you buy this close, you buy 1 point lower. And you say, okay, I'm disappointed enough. I think we're going to get a deeper pullback. I'm just going to set a limit order to get out of break even. Well, break even was 26.53. And look what happened right here. 26.53. 26.54. So bulls had one chance to get out of break even. 26.53, 26.53, 26.52. So here you had even more bulls willing to buy below their break even price, and they gave up. And you don't have to understand that, but I honestly think that's what happened. And it's also the open of the day, so why not sell the open of the day, betting that bulls will take profits. Bulls buy at, price pulls back in the open of the day. Bulls buy down here, betting on retracement. They say, gee, maybe I'll wait for a breakout above the open of the day, and maybe some sort of, I'm going to delete some of these lines, but maybe some sort of measure move up. Maybe something like that. So they buy in here, hoping for this, but then they see that and they say, yeah, I'll just try and get out at the open of the day. And they had a chance. If you do anything reasonable, usually, I guarantee you someone did that. Someone bought that close, bought 10 cents lower, scalped out. Someone bought down here. They betted on a breakout above the open of the day, and they saw it fail. So they quickly set a limit order at the open of the day or 1 point lower to get out. All sorts, any reason that makes sense, bulls did it. So, again, back to always in long, but if you're buying, I need to get out below here or, use the wide stop. I certainly wouldn't get out here. That's a skunk stop. And the bears needed a bar closing on its low here. Another, buy for any reason. And again, buy for any reason. Maybe you get out here, but if you do, you got to get long again. Probably above here. It's high to buy. But climactic, so you don't have to get long again. Bulls get out. Personally, I wouldn't sell, even though I think we'll pull back. I think it's just too climactic. Bear breakout, but they need one more bar. Bulls will buy, and bulls bought. 2 legs up. Bulls get out. Aggressive bears sell, but hard to hold short. Do they get out? I don't know. I still think we're always in long, and maybe bulls buy, but they probably got to get out below here. because this buy the close is failing. Alright, that's all the time I have, and stay tuned for Al's a video about how to study Al's new video course. Thanks.